You are listening to Mining Stock Education.
And so that's where I feel like time is both your friend and your enemy, if you like, in this way that we invest. It's your friend from the point of view that if you really like, for example, a project and nobody cares about it, then you can be accumulating shares in that company. It's your enemy if you're too eager, if you're anxious, if you're hoping to turn $1 into $10, next week sometime.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers, and returning in today's show is Mark Zaret, one of the favorite guests of all time, a real Canadian small cap success story over multiple decades. He currently works as a fund analyst for a fund out of Toronto. Mark, you've been on the show several times. You've revealed your strategy. You've shared some stock picks. And I appreciate you coming back on the show during these times of a volatility. I see some people out there on social media that focus on small cap mining stocks filled with fear. Others are filled with hope and greed. So I see like that different ends of the spectrum. Perhaps we could start the conversation with you sharing how you view these times of volatility.
I mean, I think at a time like this, you have to have a lot of conviction in whatever you're doing. It's not a time to be easily influenced by dynamic in the moment changes in the market. So we're waking up with, for example, gold up 100, down 100, up 80, down. I mean, so it's there's a lot of whiplashing going on, and so I mean, I think step number one is walk away, turn away, don't do much of anything, frankly. Mind you, if you like stories and you have the cash available, you can be taking advantage, of the volatility. But we're all programmed, with this incredible fear and greed. It's really part of just human condition, if you like, and it's just always. I always marvel at the fact that if you like a stock and it's going up, you're tempted to buy it. And if you like a stock and it's going down, you're tempted to not buy it. And I've always looked at it like the equivalent of bread at the grocery store. If it's on sale, why wouldn't you buy two? Why wouldn't you be attracted to a lower price? And that's where conviction, I think, comes in. If you don't have full conviction, then, if you see a price going down, then you doubt your own research or you doubt your own thought process. And so now you're scared to buy it. But now it's going up, so that's the market is telling you I guess I was right, and now you're potentially overpaying and paying more. So I mean, I just think it's really good to always be fighting that basic instinct. So that sometimes when I sell things, the first question I'll get from somebody might be, well, why would you sell? That the price is up, it's doing. And sometimes, it's because a stock is, hit a level where you feel it's fully valued, and so on. So it's just fighting that natural tendency, I think, is an important aspect. And when things are really this crazy, go, turn it off, take a breath.
But your situation in terms of the capital you put at risk relative to your personal liquidity, you have to be comfortable with where you are in your personal finances, right? In other words, you didn't risk too much in a risky small cap during these times, and that gives you the peace of mind to have the perspective you have.
Yeah, I mean, we generally don't acknowledge what could happen on a bad day, say, and the effects of a bear market, and again, the kind of riled up markets that we're living through right now. But I believe you should always factor them in, always. So I mean, I just remember one time I had a stock go from a very low level to something well over $3, and all of a sudden, if I looked at my screen, the broker was offering me this phenomenal amount of leverage, of borrowing capacity, and I can frankly tell you that I never used a penny of it. And the reason is for what you're saying, that you can't, if you're close to the ledge, you're not gonna make good decisions. So I agree with your sentiment there that you should always have a safety net and a way to, to not be stressed when markets are the way they are right now.
Mark, after our last interview, when we were chatting, you mentioned you had a 10 bagger that wasn't in the resource sector. And then I said, well, how long have you been holding that one? And you said, oh, let me look. He said, oh, 2016. So you've had it about a decade. When you look at some of those big winners, okay, with this patience perspective, how long in your experience does it usually take to get a 10 bagger?
I mean, these stories are all so unique that I just don't really know that, I don't really know that there's, a good answer to that question, because they are indeed, all one-offs to some degree. So, I mean, what's more important to me is to recognize when a story has changed, and you may want to exit at that point when a story has achieved your goal, and don't make the mistake of continuing to have your goal moved higher. What's the company doing in the way of performing as you hoped? If there's one mistake I've made, and I've done it several times, I feel like it's finally giving up after years, and lo and behold, of course, the next morning there's a press release, and what you've been sort of patiently waiting for happens, and you no longer own the stock. So here's what I would say: promotions can happen very quickly, but building real companies and creating value around whether it's software, whether it's a medical thing, whether it's a mining project, building real value takes years. It's many years. I mean, just sticking with mining, how many holes are generally does it take before there's a discovery? There's many projects where there's 100 drill holes, before they hit the one that really makes the company.
Mark, I believe you've told me in the past, when you exit a company, you're not more than 5% of the daily volume in terms of how you sell out of a small cap. Was that you that told me that?
We may have talked about that. I mean, I have exited on occasion where I'll just leave a standing order with a broker, to not exceed 5% of the volume. And so, the orders just trickle in, let's say, through the course of a day. Does
that work for a winner or a determined loser? Either way, is that the strategy of exiting?
I've used it on a winning situation.
Okay, but does a loser? Are you willing to sell a greater volume of the loser? It's supposedly when they really lose, there's not much left. I mean, it's a tough one because you don't give up quickly, right?
I don't give up quickly, and B, if your starting point is relatively low, what you recoup in a story that's not working out, to be frank, often it's not really that material. So it's not really something I've given great thought to be honest. Maybe, fortunately, I haven't had to sell out of too many losers, although there's certainly a list, but it's less often. So
one of the stock picks you mentioned a couple of years ago was Fortune Bay. We talked about Tenaz Energy, which you talked about on the show at $1.50. That's been as high as $16. I think it's about $11 per share. So that was a clear winner you've identified. Fortune Bay kind of didn't do anything for the last few years, and now it's perking up. Are you willing to provide some commentary on that?
Yeah. I think that when I, put together the sort of qualities that I'm looking for in making an investment, you can quantify a number of them. So, the quality of the people, the share structure, for example, the project. But if the project is, for example, out of favor, what you can't determine at all is the timing on when it will be. And so that's where I feel like time is both your friend and your enemy, if you like, in this way that we invest. It's your friend from the point of view that if you really like, for example, a project and nobody cares about it, then you can be accumulating shares in that company. it's your enemy if you're too eager, if you're anxious, if you're hoping to turn $1 into $10, next week sometime. Then it's your enemy. So it's, you're impatient. You're not willing to wait. So I see time as my one kind of total unknown. It's a factor that I have no real ability to put any real odds into. So I do my very, very best to suspend it entirely. And that's why I end up with holding these things sometimes for so long, because the other ingredients are there. But knowing when that particular company or that particular project gets pushed into action is a whole other story. So getting back to Fortune Bay, I mean, the reason I've stuck with it for all these years is, I think a good memory in terms of remembering, in fact, when one of their projects, for example, their one in Mexico, the Iquiton project, was in the discovery process. And I mean, they had some absolutely phenomenal drill results of, I can't remember some of the numbers now, but 100 meters of, 2 grams and thereabouts of gold. And that stock went from something like 25 or 30 cents to over $10 at the time. And it had a market cap of 200 million or over $200 million. That was, I think, back in 2005 or 6, something like that. So I've been following this thing for all that length of time. And I recall the excitement around that whole discovery. It was pretty much a greenfield at the time. And they went on to have well over 1 million ounces. I think it's more like 1.7 million ounces of decent grade for open pit, like above 1 gram per ton. And so, I mean, I just consider that a sleeper asset. And, through the course of time, all the company's really done in terms of that asset, let's just talk about that for a minute. Basically what they've done is they've kept it in good standing. They've, weathered the sort of storm in the junior market. They haven't promoted it. They haven't really talked much about it. But they also, at the same time, they haven't destroyed their share structure. They haven't gone out and raised money to poke more holes in the ground to create no value because nobody would care. So I think they've been smart in actually staying really under the radar, undercover. But then it becomes a kind of a public company that's really acts and behaves more like a private company. But again, if you understand and you recall and you value the project, then that's a long-term investor's opportunity, is to collect shares. So there's a lot more than that going on right now. There's a number of things that have changed regarding that project. In terms of, so one of the important things is that the project basically was suspended years ago because there was local opposition. There was a lot of local opposition. What they're called in the area of Mexico's Chiapas, and the people that own it's very much a farm community, and the people that control the farm land community are called ejidos, which is kind of I believe it's like a First Nations type of, you can think about it kind of that way, and they have ultimate control over what the land use is. And so they came out and pretty much banned mining. I think it was back in, again, 2016 or thereabouts. And that was caused because of some disputes with the people that were on the ground at the time, which it wasn't Fortune Bay. They'd done a JV with a major, and the people on the ground were just not getting along with the locals. So they came along and said, that's it, you're out, no more mining, period. So what's really interesting, and by the way, this is all public. It's not that I'm, possessing some sort of, it's all public information. But it's it's so far under the radar that it's actually, frankly, a little bit, it's crazy. So for example, there's a YouTube video for Fortune Bay, where Dale Varon, who is, by the way, a great geologist, formerly worked with Denison, spells out the story quite in great detail. It's on YouTube. They did it in November of 2024, not that long ago. And I think there's 350 views or something like that. And probably 5 or 10 of them are mine. So it's not really like people are just, now the company did nothing to really let people know that this thing even existed. And you can even actually go and search for it and miss it, because I don't know why and how, but I had to.
And that doesn't bother you, Mark? At what point are you going to get a little agitated as a supportive shareholder? Like, you've probably talked about the story on my show to more people than management has online.
Yeah, that's true. But okay, so I'll paint a picture of a totally different way they could have managed their last 5 years. They could have raised money, constantly diluting the share structure. They could have attempted to get on the ground sooner. They could have done all kinds of things that would have done nothing but completely screw up the company. So instead, they've stayed very low profile. They've maintained an excellent structure, and they've just put this project on the shelf until a better time. And so that's basically what they've done. So what leads it to being a better time, you might ask? I would say this. It's fairly obvious. One thing, gold. Gold is up, call it 50% in the last, 2 years? So the gold price is really starting to bring back the attention of insiders, executives who are sitting on properties like this. And of course, there's a dramatic change in the numbers as to whether or not these projects are ultimately feasible. So we've got a huge increase in the value, which I can actually put a little bit more numbers to in a minute. I'm happy to do that. And the second thing is, and this is something that's in the interview with Dale, that the locals have been reaching out to Fortune Bay and basically saying, come back. We want you to come back. We want you to move forward. Well, without watching that interview, I wouldn't have as much comfort as I do knowing that the tables have turned. So in other words, the community has sort of come around to the point where they really need the development. They want the development. They want the mining company back. They need the jobs. It's a very poor part of Mexico. So, in the years that have gone by, those that are in charge have grown up in some cases, or there's a new generation, and they're looking at it and saying, please come back. So we have a rising gold price, and now we have the original reason that this property, that they stopped working is now appearing to be going away, which is local opposition.
So you put most of the value in the company in this project in Mexico, because they have a project in Saskatchewan as well, a gold project.
Right. So the way I view it is that Mexico, so the first thing is you don't want to lose money when you buy these things, right? That should be your primary goal. Like, sure, we want to make money, but our first goal is to not lose money.
Now, that's a Warren Buffett though, right? That saying?
I think so. Yeah. It's funny. I think I take some of the same kind of principles and ideas that a lot of big cap successful investors have used for years, and find a way to attach that thinking into this sort of speculative arena.
But you view that thinking via your whole portfolio, as you explained to us in one of the prior episodes, though, right? You could lose a lot in one position, but overall, how you structure your portfolio, you're confident that you'll do okay.
Yeah. Yeah, because fundamentally, you're living in the tails, if you like. Your range of risk taking is an entirely different set. It's a different profile entirely. So that success can mean many, many multiples of your capital, and failure, it's very difficult to lose more than 100%. So, but because you're sort of living in those tails, on the charts, you are going to have extreme moves. But again, if you've done your homework and good stock selection, et cetera, you'll end up with a nice return over the years.
So the gold project in Mexico, I was asking, that's where you see most of the value?
Okay, so let me get back to answering that question. So what I was saying about not losing money, what I see with Fortune Bay is that the Canadian project is why and how you don't lose money. In other words, the Canadian project is in many ways much further along. There's a PEA, preliminary economic assessment. There is infrastructure. There is a safe jurisdiction. There's just about everything you might want. Road access. I mean, there isn't really anything at issue here. In fact, this project was ready to be put in production in 2007, and then the financial crisis hit, which took it off the rails. And Fortune Bay was able to buy it back then under a different entity. But now things are moving forward. So there's a new PEA, or they did a PEA, I think, in 2022. So to me, this is more or less the safety zone of this company. This is why I say I don't think you can lose money, because I think the Goldfields project in Canada is worth more than the stock price.
What did management do through the downturn of the last few years when the share price did nothing? Did they lower their salaries? Did they fund it themselves? Like, what did they show to investors that they had skin in the game?
Well, they had skin in the game by owning shares. That's number one. Salaries were kept at a minimum. The burn rate was kept at a minimum. There's just been there's no first class and there's no free lunches. I mean, it's been run, I would say, quite conservatively. Very few press releases. They've done what they've needed to do to keep the property in good standing. 2022, actually, they did a new pre-fees. So they're not sitting idle at the same time, but putting out that study, again, we're probably talking about something, I don't know, but I'm suspecting it's more in the area of a few $100,000 as an expense as opposed to, millions. So certainly they've maintained it, and they've kept as current as they can in terms of, demonstrating that this is a very worthwhile project.
And have they been bothered by the share price when you talk to them? Do they care?
No, I don't think so. I don't think they've really cared over the last few years.
And does that bother you? Probably not, right? Based on the perspective you just shared.
No, it doesn't. It doesn't bother me.
This is an anomalous perspective, Mark, from a small cap mining investor, based on my decade now at doing this.
No, I get it, and I guess the only reason I've been able to do that and stay with it is because I believe that I understand the assets. Like, it's crazy to call it, perhaps, but it's a value story. So it's an ignored or value. It's a value play for me.
And so you believe the timing of the Mexico permitting social situation coincides well with the timing of the gold cycle, and that's going to unlock a lot of the value funding to further the project.
Well, yeah, I do. So I guess that's why we're here talking about it again, at least I would say. There's catalysts that are now starting to form, if you like. One of them is a potential agreement with the Ejido groups in Mexico that will officially not only welcome them back, but also lay out a multi-year plan.
Is that why the share price perked up? It ran, it's like 45 cents. I think I looked before we started recording, and it was 20 cents for a couple of years prior to that. Yeah.
I mean, it was trading around, it was trading in the mid 30s, and they announced a private placement, which was it's the first indication that you can say, okay, now they're going to start doing stuff, that things are going to start happening. And it wasn't a small one, because the previous ones were just enough to keep doors open, a few $100,000. This time I think they announced $2 million. And now it's been, I'm not sure if they announced once or twice upsizing. So I think now it's turning into a $3 million raise.
And the full warrant is already in the money at the time we're chatting
when it was announced.
Yeah, because the warrant was at 45 and the share price last I looked was 45, 46 cents. We're talking Canadian dollars, by the way.
Right. I think it's a half warrant, is it not? I'm pretty sure
I thought it was a whole warrant.
We can double check.
Yeah.
So why would a stock go up when the company's actually now creating dilution, you might ask, right? Don't they often go down? Quite often they do. But I think
unless there's so much demand out there, management left it in the open market, right?
Well, yeah. I mean, it's a signal. So when a company like this with I think these assets, sets out to now raise $3 million. It's a real signal to the market that it's going to become reactivated. And maybe that's the very best word of all, is a reactivation of a semi-dormant listing. That's perhaps a way to look at it. And so that's created some excitement around it now. So yeah, Mexico is hopefully, and I say this hopefully certainly as a shareholder, that they will be able to achieve what I think is one of the great catalysts here, is that an announcement regarding an agreement with the locals. So that would be a big one. And then the other thing is another updated PEA in Saskatchewan. That would be another one. So there's a series of potential catalysts here that are, I think they could really impress the market, for example. So I have just a couple of numbers here, and then we can move on if you want. In 2022, their PEA, they used a number of different scenarios, right, to try and put a net present value on the project. And the range of prices they used was $1,450 gold up to $1,950. So that's like a $500 range on gold. And then they calculate the net present value. So this just talks a little bit about the sensitivity to the gold price. Gold went up, or at least the spread on gold on those different scenarios is 34% from top to bottom. But the difference in net present value from top to bottom is 173%. So what that really tells you is that the economics are not following simply the gold price. They're multiples of the gold price. And so the median at that time was $1,650 gold. So what I would say to you is, I don't know what they would use now. I have no idea. But I would suspect that with gold trading well over 3,000 as we speak anyway, it's moving around a lot. But I would tend to think that something in the area of 2,300 would be considered today conservative. Let's even go lower. Let's go to 2,100 gold, if they might use that as their baseline. I think we're just going to see. So at 1,950, the net present value was, I think, about 350 million or maybe more. So I really think that now we could be, now again, just me making up a number, but it's got to be double that. And in fact, it could end up being closer to $1 billion net present value. So I would have to say that for a stock that even at this price today, it's still a $20 million market cap. So that's why I don't think you lose money. I think Goldfields is worth more than the share price, and I think the entire Mexico operation, if things go well with getting local access and continuing to drill, is free. It's just free. It's all free.
Is this one of your top gold stock picks then in your portfolio? Yeah. Junior gold stock.
It is one of the ones that we own a lot of. Yeah.
And is there any other junior gold stock you'd want to share, since gold is kind of hot right now? The other one, maybe you should title this interview "Broken Record." I'm not really sure, because there is an element of that, and going back to that point, these things take time. They just take years. There's not really any way to avoid that. And so, the other name that comes up to mind that I would think of is Aurion Resources, which we have talked a little bit about in the past, the symbol being AU. On the venture in Toronto.
Yeah. There's just so much going on behind the scenes with this story right now that I find it extremely intriguing. I'll try and just keep it very simple for the time being. There's a company right next door called Rupert Resources, which has made a terrific discovery. I believe they have about 4 million ounces, or between 3.5 and 4 million ounces at better than 2 grams a ton. They've just raised a significant amount of money. It's a very, very interesting project. If there's a problem with it, it's that it actually sits pretty much on the border with Aurion. And I know we have talked about this a little bit in the past. from the amount of work that I've done and what's available on websites and so on, it seems to me that it'll be very, very difficult for this project to move forward without some sort of consolidation of the entire area. And so it's really intriguing. To me, it's like I think I don't know if it's 3-dimensional chess or 4-dimensional chess. There are so many, there's a lot of moving parts, and they're all really fascinating. So one of them is that the joint venture, the land right next to Rupert's discovery is a joint venture between Aurion and B2 Gold. And last year, B2, there was a press release announcing that Rupert was buying 70% of the joint venture from that B2 would be the seller of their 70%. That transaction actually never closed. And I think the reasons it didn't close were kind of a little complicated, but again, to keep it somewhat simple, I believe that Rupert thought that they could control that area and that land by owning 70% of the joint venture. But it came to light that that wouldn't get them control, that Aurion had their 30% interest, but they also had a ROFR, a right of first refusal, against the sale of the 70%. They also had the right to, control what happened on that land. And so the deal wasn't finalized. And so we have B2. They indicated that they were willing to leave or wanted to leave Finland at the time. But once again, Finland, the gold price then was, I think, about 2,300. So now at 3,000 gold, we have to start asking ourselves, well, is B2 going to become interested again? Clive Johnson, who's the CEO, in public said that they believe they had, and this is after very, very little drilling, they had about 600,000 ounces. So it's an early stage project. Is B2 going to get re-engaged in Finland? No idea. Absolutely no idea. But more importantly, the Rupert project, in my opinion, I don't know. I'm not an expert, Bill, but I've looked at their design and it's 20 meters from the border. So just intuitively, I just don't know I don't know what kind of difficulties they'll have around permitting. It seems to me that would be a bit of a permitting problem. And so are there going to be, are they going to continue to redesign it to move it away from the border? Are they going to shrink it in order to get a permit to go ahead? Or alternatively, are they going to try and expand it by finally doing some sort of deal to consolidate the area? So we have Rupert. We have another piece of the puzzle here is Agnico, which has a producing mine not very far away. They're also a shareholder of Rupert. They've actually also just put more money into Rupert. So you have to question, why would they do that? If they're smarter than me, but maybe they don't think there's a permitting problem. I don't know. But assuming that they understand the lay of the land, then it just leads one to think that there has to be a master plan, I believe, and that the master plan will be, again, consolidation of the area. And I think that leads to me saying that Aurion is an undervalued security, in my opinion. And the reason I say that is because I think their market cap is about 100 million. The value of the JV, according to what Rupert offered B2, Orion's piece is worth pro rata about 50 million. So half of the Aurion market cap would be realized in some form through that consummating a deal like that. But that would be the low number, because I don't think that's something that Aurion would be too happy about right now. So I think I think they feel that their piece is worth more. So how much more? Again, we don't know.
So how would you describe this play? It's not a play on geology per se, the way you just described it. Is it a play on management and their ability to negotiate a deal at this point?
Well, yeah, that's number one. Or certainly a good part of it. Will management be able to negotiate a deal? Will Rupert be interested in re-engaging. You can read the press releases. They were engaged. Now they're not engaged. So that's certainly part of the jigsaw puzzle of the whole thing is will management re-engage? But even more importantly, Aurion has done some amazing stuff on their own. And so if you say, well, the rest of the company is worth 50 million, I would argue it appears to me to be worth a lot more than that. The reason I say that is, well, we have multiple discoveries on the Aurion 100% owned property. And the most encouraging, I would say, is Karaselka, where they've come out with some really interesting holes lately. Now, the width is not quite as wide, perhaps, as some of the Rupert holes, but the grade is. So they've had holes of, I believe, around 40 meters of over 2 gram material. And there's a whole area there that hasn't even been drilled yet. And it seems that as they step east, the results get better and better. So it would be perhaps a different shape of a deposit, but it's starting to show the continuity of a really interesting deposit. So we have that. We have another area called Amarusco, where they've had some very, very high grade, but it's also admittedly more nuggety. All that really means is that you just have to do a lot more work. Again, time. So there's more time that needs to be spent and more, certainly a lot more drilling, because this was virgin land 5 years ago. This is all still super early play. So if you've been there for that time, maybe it seems like a long time, but in terms of developing a gold play, of this broad, 5 years is really not that big a deal.
Mark, with your perspective and how you value time and how you give time, when you make good money and you harvest a gain that maybe was a decade in the works, do you not spend it as quickly because you realize how long it took to earn that amount of money?
Well, it takes time to deploy, if that's what you're asking.
I mean, even in your personal life, like your personal finances, if you knew that this big win in a small cap took a decade versus so I started out, I literally had 10x on these little silver juniors in 2016 in my first 6 months. I just happened to get that right. And that's why I'm focused on it now, because I'm like, wow, if you can do that when you don't know what you're doing, maybe if you figure some things out, you could do this more consistently, right? With larger sums of money. So that was part of my journey. But when you do that, you also get a little loose with your money, because you're like, oh, I just, 10x'd Impact Silver for one. I bought it at 10 cents. It went to $1. Bought First Majestic Silver at $2.73 on the New York Stock Exchange. It went to $19 6 months later. So when you experience that, you're like, oh, this is just a money machine. I put my money in, 6 months later, I get my money out. I'm going to do this again, right? So it warps your perspective on things, because even in the last decade, I've learned money comes and goes in seasons. Like, you earn money in seasons, and I've had some seasons that are really good, and then I've had some lackluster years as well. So I'm just kind of poking at your perspective, having done this over probably 4 decades, if you could share with listeners.
Well, I mean, I think basically what you were sort of referring to there is discipline and your level of discipline, right? So, you can be...
And your relationship with money too, right?
Yeah. Well, I mean, one thought that comes to mind is that it's easier to be patient when you don't need the money. In other words, if you're in a situation where lifestyle is not threatened in any way, shape, or form, it obviously, I think it allows you to have the patience that's required. And that's why, it is important to not overextend and be too reliant on share prices at all. So, I mean, I think that's one aspect of it, is that you just can't have your consumption and your well-being threatened by any stock price. I think that's it's just an important thing. And then when you're reallocating capital, I mean, I think it's just important to stay very, very disciplined and not not feel too good about what's just happened, because this thing we call the market is it's it's greater than any of us, and it will teach you some horrible lessons on a regular basis if you ever get cocky with it. I mean, that's certainly one thing I've
So you
felt
mentioned
over the years.
cockiness. There's so much cockiness on mining Twitter, on macro Twitter, like so much I told youism, where one guy will retweet somebody else's thing, insult him, and say, see, I told you, or I view it differently and I'm right for these reasons. There's so much of that. And like removing the emotions from your investing decisions, removing your ego from your investing decisions. Those are some things, Mark, you've apparently been able to do, because to me, those are some of the killers for good investment decisions.
Bill, I don't read Twitter. I mean, I just don't. I don't find any value. So I really just don't get caught up in that. To be honest, I could probably stand to hang out a little bit more where there are smart investors hanging out. I mean, there's certainly a few here and there. I mean, I know CEO.ca has some important contributors over there. And, but honestly, I spend extremely little time on social media. I think it's just an enormous distraction.
And so where do you get your inputs? Just from people you've developed relationships from? Like
I think
humans you know and trust, not anonymous handles on Twitter.
I mean, after doing this for somewhere over 30 years, you develop a community, and a community of people that you trust. And alongside of that, I mean, that's maybe on the investment side. And then on the investment banking side, people that will show you opportunities. Again, you learn over time which guys to pay attention to and which not. And alongside with your own research and discovering things periodically just through, regular searches, as we've talked about in the past. And it just all becomes a bit of a soup. And out of it emerge, hopefully, a few really good ideas a year. And honestly, that's all it takes.
So like for you to be disciplined and patient, those two adjectives that you've used, you have to tune out all the noise. Like what macro inputs, do you have any that goes into your thinking and your investment decisions, Mark? Do you take any, listen to any economist or Wall Street Journal or?
I mean, I do listen to some. I subscribe to a few things here and there. I get a lot of incoming news, but I find sometimes just reading the headlines is plenty good enough. You want to be on your toes as far as sort of, major things, major moves. But when you're a real true bottom-up investor, then it really starts to become kind of irrelevant. And so I just don't get overly fussed about what's happening today. And I don't really pay it that much attention. I mean, one of the worst things, especially if you're involved in a fund and you have meetings periodically with either investors or potential investors, and they will ask you questions such as, well, what's your outlook on this? What's your outlook on that? And it just seems very unprofessional to say, I don't have one. But in many instances, it's actually the truth. And so, so the tendency, of course, is, well, I better make something. I don't want to make something up. I actually quite often say, I don't have a view. I just don't.
You could never be a newsletter writer, just so you know. Because you have to have an opinion on macro and you share it, whether it's right or wrong, who cares? Draws attention to yourselves, get subscriptions.
Well, at the same time, there's obviously some macro thought here going on, right? Like I have to be, for example, in mining, I'm a believer. I'm long-term bullish gold. Why? Because I think, it's been seen as a safe haven and a financial asset pretty much throughout the history of man. And so I would rather argue that that's going to continue than argue that that's going to suddenly stop in my little time on the planet, in my generation, that's going to suddenly stop. I don't think so. So I think, I'm comforted by some macro thought, but I think in a way it's so large that I don't need to, You
factored in millennia of experience into that macro conclusion, right? In terms of gold's use in economies over different civilizations.
You're right. it's that kind of conclusion. And anytime that I sort of try and delve into it a little bit more, I say, well, okay, if this happens, well, it'll be good for gold. But what if this happens? Well, long term, that'll be good for gold too. What isn't good? Like again, stepping back in decades now, not just days and years, but decades. What would be bad for gold? I would ask. I don't know. I don't have an answer. Now, currently people would say Bitcoin. Maybe, remains to be seen. I mean, we don't know. I don't think we know the answer to that, but I don't think it's going to erase the value of gold personally. So I'm quite happy to remain an old-fashioned gold investor. And, just even the last year or two, I mean, if there's times where it doesn't, appreciate, then we go through a catch-up phase. And it just maintains value. I remember buying some gold.
There's your long-term perspective again, coming through.
Listen, I bought some gold back in 2000. I forget 2000 and I think it was like 2010 or 10 or 11, and just to have and hold. Gold was at the time it was about 1,600. So again, I ask you today, like, was that a bad move? Maybe if I timed the market miraculously, I'd be better off. But I didn't have to spend 5 minutes thinking about that. It just sits in a drawer.
So, Mark, have you ever had anxiety about your small cap portfolio with this perspective? A disciplined approach where you don't put too much money at risk that your lifestyle can't afford. You have a long-term perspective. Have you ever found yourself anxious about your portfolio?
Yeah. I mean, I'd be lying if I said no. Sure, there have been 2 times that come to mind that were quite upsetting. And one was 2008 and one was March of 2020. So those 2 times were both anxiety producing. And there's just no question about it. So, yes, we were on the verge of what could have really been a major financial collapse, and I mean, I don't even know if people understand how close we came to a real financial breakdown back in 2008. It was pretty serious. And so, sure, that was stressful, Bill. That was a very stressful period. But a year later, there was more than a full recovery in my portfolio. And so I just basically survived, looked at the math, realized I had capital to carry on living, as normally as I could without worry or without trying to worry. And then by the time, the clock ticks and things improved. Now, similarly, in March of 2020, we were all kind of looking at a pretty ugly scenario, where, as you recall, gold, I can't remember, well, gold went down, but eventually came back, but crude oil went negative. Like I don't think anybody had ever experienced a commodity contract going negative, which is another way of saying, take it off my hands and I'm going to pay you, and so the losses at the time were enormous. And, I think I was already working in the fund. I think we went from something like being down 30 or 40% to closing the year again positive. So once again, if you've managed your capital in such a way that you just have to come back to lifestyle.
So what was it that provoked the anxiety in 2008 and 2020 with your long-term approach? Were you fearful that it wouldn't recover? This time is different?
Well, those thoughts go into your head. I mean, after all, if I was to say to you, I'm completely immune to the fear and greed, again, that would not be true. But the fear has to be, I suppose, for me to be personally affected by it, the fear has to be so palatable and real. And it takes that kind of level for me to feel anxious. So, for example, what's happening in the market today, I'm sure it's very upsetting for some people, but we just actually might look back on it and say this was a well overdue correction. We never know what's going to cause it, but okay, it's being caused by some, pretty drastic uncertainties. Let's just say from our, in the daily news flow, et cetera, et cetera. It's not, but how will it be remembered, and what will those chalk marks look like on the charts 3 to 5 years from now? Most likely a garden variety correction, and not more than that.
Mark, you're a real investor sharing real experiences, and that's what people like. Any concluding thoughts you have as we bring this conversation to a close?
I think it's just perhaps that, when we do see these kind of levels of volatility, to shut the machine off and go for a long walk. That's my advice. Don't get too caught up in the day to day. Maintain focus, understand why you own what you own, and not get overly fussed about price in the moment.
A mutual friend told me he survives junior mining bear markets by a property he owns just going outside and working and not even thinking about the markets for periods of time. Just to reinforce what you just said.
Yeah, well, I think that's important. I think it's very important. And I've done something similar with, having a little bit of a rural property where I can, limb some trees and do all kinds of, stuff like that where you're just clearing your head. So yeah, whatever it takes to clear your head, I think it's really important.
And Mark, in previous conversations, you didn't give out any information for people to follow you online. You said maybe hear from me in the next interview. Is that still your approach to creating a following online?
No, I mean, I don't do anything to do that, Bill. I mean, even my LinkedIn there's almost nothing there. I just kind of in the same general boat as I've always been. And, I should have said this at the top, but I'll say it now. Anything I've said, it's not a stock recommendation. It's just one man's opinion. It doesn't represent any views on behalf of Spartan where I'm employed. This is not investment advice. It's just the observances of one guy.
And I don't own any of the companies that Mark mentioned, nor do I have a business relationship with them, as I'll also disclose that. Mark, always appreciate the conversations. Thank you for joining me on the show today.
Pleasure, Bill. Take care.